Hello everyone, good afternoon. Today is 2nd of May. I am Narendra, founder of Growthinvesting and a small case manager. So we are discussing, today's topic is update of growth investing small case, which is into mid cap space. And name of the small case is GI Growth Champions Mid Cap. I would explain you the rationale behind creating this small case and what are our expectation of this small case, what are the latest updates which we have applied to this in terms of rebalance, and who should choose it. We are discussing these 4 points in this. So how this small case is constructed, I will explain you shortly. One is, this small case is created out of Nifty Mid Cap 150 index. There are 150 companies in that index. One, we have taken a concentrated approach, and this small case consists of only 10 companies selected out of those 150 companies, right? So the overall composition I will share definitely. Post rebalance, yesterday I have done a rebalance in this, and the current composition of this is specialized finance 20%, real estate 20%, oil and gas minded exploration and production is 10%, public bank, PSU bank 10%, precious metal jewelry 10%, heavy electrical equipment 10%, power transmission and distribution 10%, and renewable energy, or you call it green energy, 10%. So this makes, with this composition, sectoral composition, it goes to 100. The overall number of stocks as 10 out of this. So you can safely assume 2 stocks are in real estate, 2 stocks are in specialized finance, and rest you have one stock each. So another question generally which users ask or investor ask is, how do you select the stocks? So we select stocks based on our own model, which is growth accelerated momentum system. And this model based investing has given us, real good results, stable results, consistent results. So GAMS has got a power, and certainly that also being reflected into the performance of portfolios. Now, how are these stocks placed? So these stocks are placed at equal weight, meaning the money deployed to each stock is put equally in each of them. All right. We do a rebalance monthly. Monthly means generally first of every month, because in model investing there has to be a discipline. Rarely it happens, then because of certain market condition you might go for a change in between, but so far in last 8 months this has happened first time once in March. And we should also look at your portfolio performance on monthly basis rather than on daily basis, because in daily terms market goes up and down, so you should not be bothered about that. As a mature, stable, disciplined investor, you should look at on a monthly basis. I would recommend. Now, what do we do in rebalance? We review the stocks in our small case, their composition in our small case, how much they are, their weightage they are, and if any stock requires a change, only then we go for it. This time we had also done another pruning of our small case, because earlier we were operating at 12 stocks. Now we cut the flap, we put it into a pure concentrated approach, 10 stocks, that's all. So you would see a major change happening this month, when in 5 new stocks are bought in and 7 had been moved out of the small case as of now. So it's pure streamlining done for this small case. And I think these are the sectors which I spoke about is power transmission, renewable energy, heavy electrical equipments, oil and gas, specialized finance. All these are momentum sectors, and we have picked one good performer out of them with their good financial ratios. So if you look at our financial ratios of our current GI Growth Champions Mid Cap. Certainly, clearly represents us that the ratios are real good, real nice now. And with these ratios, I think we see a better return prospect for the coming month or quarter. I won't say generally weekly or 15 days because that's a too short of a time period for any company to perform, because results are declared quarterly. So more or less those stocks which perform better stays with our small cases even for a longer term, and that's why the term multi-bagger. So these multi-bagger means sometimes they double, sometimes they triple in the same space or same index. All right. And since on 31st March, index has also gone through a good change. New players came into this index, new companies, and certain companies also were pushed back to the small cap segment. And a few good players has come up from small cap to the mid cap. So that's a natural elevation. All right. And now I was looking at certain ratios. So let me also share those ratios with you quickly. And yes, market cap distribution, I missed to share it with you. 20% is large cap and 80% is mid cap. So it's purely a mid cap, but those 20% which are representing large cap are just by virtue of market cap. So market cap, small case has a system to identify whether it's a large cap, mid cap or small cap, but purely treat these stocks in a mid cap space. So now on terms of financial ratios, our small case financial ratio are like this way. Price to earning is now 25.93, wherein the equity mid cap is 30.62 put together, 30.62. Price to book is also comparable. We have 4.97 and index is around 4.53. I'm reading on screen on the right side of this recording device. Sharpe, it's not there, but very soon in 3-4 months around we will get the Sharpe. Dividend yield is also a little better than index. It's 0.8, wherein in the mid cap index it's 0.74. So overall it's a healthy balance of ratios also, and trust me, intent of creating these systematic and model based small cases is to ensure a stability both in terms of return, in terms of earnings, in terms of dividend, and in terms of mental peace, which is more important, wherein you can deploy your capital, your hard-earned capital. And that's all for the day. Thank you. Bye-bye.